Not top chat. Live chat. Hit the thumbs up button. So if you're tuning in late, hit the thumbs up button. Bum, bum, bum. And I've got to go over here and put Active Trader Pro. Cancel. Scroll down. Active Trader Pro. Boom. We're going to go over to Active Trader Pro. I need to move this a little bit more to the side there. Let me see how this looks. There we go. We'll go over here. What am I looking at? DPST. It is sliding. Oof. Morning, Joe. Morning, William. Wow. Wow. I got a lot to talk about today. I'm going to move this. Up there. Okay, we got regional banks. Man, I hope nobody's in these regional banks. And I had kind of said TPST. I'd said traded on the 65-minute because it was. Let's see. Got you. It still has you out on the 4-hour. Let's look at the 65-minute. It hasn't won in quite a while, even on the 65-minute. It saves you on the 65-minute. You lose 43% versus losing 83% over 8 months. Let's look at long, though. If we look at the 7,000 candles, I think that's 5 years. Yeah, 5 years. You lose 82% versus losing 97%. Holy crap. You guys can hear me, right? Let me turn this up. Yeah, I think I have to turn up the... Turn up the gain a little bit. There we go. And I'm going to open up GarageBand. I always forget to do this. Bum, bum, bum. GarageBand. There we go. Now I can hear myself. Boom, boom, boom. Okay. Where are my notes? There are my notes. Google, look at sell in May and go away. Brian asked. It's definitely, let me look up Ingersoll Rand. That's the one I want to look up. Yes. There, IR. IR is the symbol. IR. This is one that... oh, I should add Tesla on here. Tesla. I like it too. And here's why I really like it. Morning, Jose. If you look at Lucid, which reported earnings, I have this down. And this is, I'll put this into the podcast too. Here are my notes. Okay, I've got Palantir earnings, I've got PayPal earnings, and I've got Lucid earnings. Here's my note, and it's down below, but Lucid missed and reported a loss, plus lower deliveries year over year. Don't get sucked into this one on hope. Enough capital, they have enough capital to last until Q2 2024, but they reduced deliveries year over year. Where will they increase demand when it's such an expensive car? If they need more capital, expected a dilution event at some point in time. It trades at 4 times revenue, not 4 times earnings, 4 times revenue. And you know, margins on cars are just going down. The only reason to buy this if you think that the Saudis will buy it and take it private. But Lucid, here's the thing. It's trading in pre-market at down 10% at 692. I think even if the Saudis decide to take this private, you could be down at like $4. I mean, why would you buy it now with such bad earnings? They lost 43 cents a share. It's not like the car, that's double what they lost here, 28 cents. They're just not delivering cars. It's a super expensive car. $120,000, I think, is one of the prices. They don't have a cheap thing. So where does that go? In my mind, I mean, you're not going, if you're buying a Lucid, you're not going to Ford and GM. You're going to Rivian, which is just too expensive, or you're going with the X or the S, one or the other. So I've seen Lucids. They are nice cars, but I like the price. I think if you got it, Zephan, I think 1.6 handle is better. It's trading at about 170.05. But you're not going to notice the difference. It's just, it'll be up at this 250 point. I was reading about how, and you guys have heard me talk about it. Full self-driving. I think it's $15,000 now. Jose, Uraj, I think it's Uraj. I will, I'll address that in a second. But safest way to make there ain't no way to make safe way to make daily profits. Your safest way is to invest. But here's my thing about Audi. I like them. They're a huge sponsor of MLS, where I do work for. And in fact, the All-Star game and stuff, they provide a bunch of e-trons for people, for executives in MLS to drive around. And one guy came up to me, he goes, I know nothing about electric cars. How do I do this? He didn't know how to charge it, so I had to go and charge it with him. The problem I have with Audis and every other car manufacturer, electric car manufacturer, is the charging network. The Audi's a great car. I don't think that they're very good at battery management. I think Tesla beats everybody as far as battery management goes. And I mean, you can't beat the full self-driving. It's $15,000. I think there's an advanced autopilot feature that you can get now. Personally, and I wrote to Elon a bunch of times on Twitter, and I've told him, highway, you can't beat full self-driving. You can't beat the Tesla. It's 100% incredible. Local roads, my parents have a 2020 Model X, and I have a 2018 Model 3. Local roads, it is crazy bad. And not that it's horrible. I mean, it's better than any other car I've been in. I think that the pure driverless ones are probably better, like GM Cruise and the Waymo stuff out in California and I think Arizona. But, I mean, if he gets it right, I was reading yesterday. I think I started on this thought. I was reading yesterday, and I'll put this in. AI will be point-to-point in FSD, which is huge. So essentially, what AI and point-to-point in FSD means, this is my understanding of it. So the way AI is implemented right now, it's not in the actual driving of the car. It's in the recognition of what it sees. So it uses AI to determine, okay, what is that? Is that a trash can? Is that something else? Is that a dog? Is that a human? Is that a truck? It uses AI in that respect. I need to probably get closer. But the way AI point-to-point will work is artificial intelligence will start making decisions about actual driving, which it hasn't. So, here's the thing, Jose. I mean, people bash on Tesla for fit and finish. I've got 3 friends that work for Tesla. And if you had as crazy a customer base with Ford, with GM, with Audi, with Mercedes, you'd have the same bashing online. There are Mercedes that are delivered with doors that are out of, door gaps, panel gaps. Yeah. And Joe, I think you got into an accident with your Tesla, and you bought another one. I mean, again, it's crazy. Hey, Brian. And the phantom braking sucks every time. I mean, what's crazy is every time they release a new version, you get a download. Essentially, you get an alert on your app, and it says download the new version. You download the new version. I should change this whole thing to Tesla. But you download the version, and you can almost guarantee that for the next week, you're going to have phantom braking. It's crazy. And I don't know how that works, because I don't know if overnight the neural network just understands that, hey, we don't want a phantom brake anymore. But it's nuts. It's just crazy. And Joe, you're right. I mean, phantom braking, I should probably bring that up too. We got to cross up on PXD and Devon and Google. GOGL got to cross up. I don't know if GOG. Walmart, CRM, XLY. I think these are all from, a lot of these are from yesterday. Jose, I will tell you, I will give Audi a shout out that I had an Audi A something as a rental car in Chicago. I liked the interface. It used Apple CarPlay, but they had a super, super nice, a fantastic interface that was easy to use. And I still laugh. Who the F is going to invest in GM when they're getting rid of CarPlay? I mean, why would you invest in GM at all when CarPlay is the number one thing that people say is the decision to make the car? And GM says, no, we're going to do the software. Jesus, GM. You're crazy. And GOG. Walmart, I got in there. VOO has a cross up. Costco has a cross up. Yeah, I think it's the EQ line or something. It's not that no one likes healthcare. Healthcare, here's the thing, Brian. Healthcare is a safety. So when you go to into a recession, if we're heading into a recession, you can see a lot of people running to healthcare since it is a safety, and it's typically, our government pays a large, I know people don't like to hear this, but the government pays a large portion of healthcare premiums now. So, and I know I've got it in there for your question from Facebook yesterday. Oh God, energy names. OIH had a cross up, COP, PXD, MRO, BTU, Devon. Almost the entire energy space had a cross up yesterday. SLB, SHEL, Cord Energy, which was a Tom favorite. Those longtime listeners will remember Tom, R.I.P. Tom. Not really. Long story short, Tom Tom was a listener, day one listener, who had a daughter who kind of liked, I guess, my speak. I think she was 8, 9. I forget. But Tom all of a sudden in the Facebook group said, "I refuse to be disrespected like this. I demand acknowledgement." I still have no idea what he wanted acknowledgement of, but I thought it was kind of funny. And then, Stefan, I'm never going to say somebody's annoying because my friends call me annoying. But he was definitely, I mean, the guy had a lot of time on his hands. He also, he had a ton of, yeah. Yeah, Zephan, I think what he did is he went down anybody that commented on his stuff and he started private messaging them novels. Yeah, no, 100%. He and Zephan, I think I said this. The guy, I mean, I think he's lonely and he wanted friends. On his birthday, he sent me $250 as a tip. And then would constantly say I owed him. Listen, motherfuckers, you give me $250, I don't owe you shit. I will look at any stock that you want for free. You give me money, I'm taking that money. But realize, I don't owe you crap. Remember, never listen to a douche on the internet. And that douche on the internet is me. And I got a ton of, we had more people join, the private Facebook group anyway. Christian, man, you would have had fun, Christian, if you hadn't been in the Facebook group with Tom. He would leave these like he would post these posts. And I'm not kidding. It would be a novel. I'm sorry, if you want me to look at a stock, type in the $sign and then the symbol and say, "Hey, can you look at this for me?" He would leave a novel of the small cap stocks. And these super, I gotta show that one. Well, and I don't know that it was amazing picks, Evan. Remember what he would do, and this was what he would do. He had a portfolio. I remember telling him, I don't think anybody should have more than, I think, 30 to 35 stocks in their portfolio. And I remember he told me, "You're crazy. Look at how much Buffett has. Look at all the ETFs out there. You've got to have minimum 120 stocks in your portfolio." And he's like, "I'm smart enough to cover this." And I'm like, okay, whatever. ETFs have staffs of how many? Buffett has a staff of how many people? If you're managing that by yourself, yeah, good luck. No, Jose, I'll do it in the when I do the podcast. But But it was interesting. I mean, he was a douche. And his picks, Zephin, what he would do is at the end of the day, he would basically type out these big movers or ones that had already had 25% moves. And then he would post it and say, I'm already in. I didn't believe him. I mean, and then he showed me his portfolio one time. It was like, one share of each thing. I was like, yeah. Douchebag. And then his wife, yeah, it can, except my take on, here's my take while you bring it up. I'll bring up PayPal. Earnings good, but it was slightly below estimates. The issue is their CEO is going to retire. They haven't identified who's coming in. I think you can buy it anytime, in the 70s. If you get into the 60s, I think it's a good buy. Their earnings were solid. Here. So here, $1.08. They went up to $1.24. They're down to $1.17, but it's still solid. You're at $70.23. I think you're going to fill this gap up here at 84 to 90. There's also a gap back here. I think those gaps get filled before you get down to 50. I mean, here, if we just look at a weekly, look at how soft that is. Now, you go over here to FinViz, it's still, the PE is 36. It's still a little bit high. Forward PE is 13. It's up 6% year to date. That's going to take care of it today with the earnings. Average price target is 98.41. Mizuho April reiterated $92. Oppenheimer reiterated $89. You're going to see a bunch of these. I just think, I mean, who doesn't use Venmo? So, and sorry, Zephin, if he offended you. I know you're delicate in that sense. Spider sectors. Let me go my personal watch list. By the way, just so everyone knows, if you did join TrendSpider and you need any of the scanners, any of the algorithms, any of the watch lists, I can provide them all. I got to put a PDF together of the everything that I have. Boy, Enphase. God, I still love that. I mean, look at that button hook right there. Look at how low that RSI is staying. It just crossed up. And by the way, we got bond rates. This is the updated stuff. Again, U.S. Treasury 3 months at 5.19. If you just want to tie, Urev, I know you're still here. If you want to know how to make daily gains, the safest way to make daily profits, buy a U.S. Treasury bond. You won't get 5.19 in 3 months. Just know that 5.19 right here, it's an annualized, But you can go into Fidelity and just buy one of these Treasury bonds. And you'll make the equivalent of 5 point. You can rebuy it after 3 months at whatever rate. If you go 1 year, 4.8. And these are, if the U.S. defaults, it is a good question. They asked Janet Yellen yesterday, what happens when the U.S. if the U.S. defaults for those. And you could get killed. The CIA will come in. By the way, the All In podcast this week with Joseph Kennedy. Interesting. The guy is a bit of a nut job. He's incredibly intelligent, I think. incredible family history. His uncle was president. His father was also assassinated around that time. He does think that the CIA had a lot to do with it. Great discussion on the All In podcast if you guys want to listen to something. He's running against Biden for the Democratic nomination. So, by the way, Disney, right before earnings, gets a cross-up. Their earnings are coming up tomorrow. Is it post or pre? Post. Let's put this in. Let's see the Dow 30. I'm just going to go over the major ones. I'm not even going to do the energy sector because I have tons of energy cross-ups. Visa, Walmart we have, CAT cross-up, AMZN cross-up, Travelers, and Merck we have. Wow, there's a lot of cross-ups, man. That's the Dow 30. Let's look at NASDAQ 100. We're going to have a lot from yesterday as well. Oh, God. Kellogg Dr. Pepper. I'm going to put that in. That's not incredibly. Baker Hughes, Costco, we've got in there. eBay. I think I said eBay when it crossed down here that I thought it was going to. Europe. There ain't no safe way to make 20 plus in a day. Yeah, weekly stock pick. He's got Microsoft again this week. I think, Brian, I think a lot of the listeners already subscribe to his weekly newsletter. His pick is Microsoft. My belief on Microsoft, I think I went over it. You can hear the keys in the background. It's a little extended. I mean, his goal is 1 to 2% a week, which is great. Yurev, you should subscribe to, let's go to Twitter. Go to Twitter and weekly, here, it's called weekly. Oh, come on. There he is, my weekly stock. You should subscribe to this newsletter. Yeah, you know what I will do? What I'll do is I'll put this in the let's just copy and I'll paste it. No. Stop. What are you doing? Paste. Oh, stop. There's a link. Subscribe to it. He's got transparent tracking. You can see annual performance. So far this year, he's down 6%. It has not been a good year for him. But last year, he'll come back. Trust me, he'll come back. All he does is give you a pick on Monday and says, buy it on Monday, sell it on Friday, or sell it throughout the week. He will, if a stock is losing too much, he will absolutely get out of it and throw it, tell people, hey, we've hit our stop loss. Let's go, get out. But subscribe to his newsletter, completely open, fantastic tracking. Does what I don't do, which is track, and what Jim Cramer does not do. He tracks it 100%. just a great, and subscribe to his Twitter. He gives incredible, go to his Instagram. I can't, I can't recommend it enough. ATVI, huh? Melly. We have AMZN. Illumina, this one. Brian, that's a little dangerous. My friends would say, "You're out of your fucking mind, Brian." Him? What are you doing? Scan. Cat, Cop, BK, Cost, Disney, T-Mobile, Southern Company, CRN, Target, Google, Walmart. Okay, that's enough. I mean, look, I can't show you all the scan. You know what I'm going to do? I'm going to post them in the private Facebook group. We're going to go to the Facebook group. And I'm going to post all of these are bullish. Let's post this. Here are today's scans. On the pod. You are living dangerously when it's just me. James commented. Okay. Yeah, James is good on healthcare. He's had Humana. I'll meant to put that in my notes too. Hold on. James added. Boom. UNH. We put the dollar signs in there. There we go. Okay. Boom, boom, boom. Gonna close that down. Here's what, and I'm gonna go over this on the podcast, but those of you with TrendSpider, did you notice we had a cross up on the 4 hour yesterday on SPY? It's crazy to me. I mean, we're in this kind of trading range. I do think that this 396 to 398 gap here, I think we come down there. But shit, the market's already cut its losses in half. Boeing is up over 200. Disney's up over 100. Disney had a cross up right before. Okay. I'm going to start the podcast now. And by the way, if you watched yesterday's YouTube, my mouth was all off. I have no freaking idea what happened, how the audio got that messed up. But, and Yurev, my greatest advice to you is just tune in here. Tune in here if you want to know how to make money. I am working on a PDF where I'll probably sell it on GitHub or something for some small amount. I won't charge a fortune for it, but it'll give you the websites that I use to look up things, the tools that I use, meaning that I know you guys see TrendSpider. I know you guys see Active Trader Pro. I've used Webull in the past. They have a great online tool for tracking all of your moving averages, your MACD, your RSI. I'll go over all of that in that little thing. I'm working on it. But at the end of the day, if you guys tune in every day, it's like, the PDF probably wouldn't make a lot of sense to buy. Might, but every now and then I'll do like TrendSpider. I'll say, get it 50% off. And I'll constantly update. I'll try and make it so that it's updatable as well. So if you subscribe, like, you buy it one time and then I'll update it every now and then with stuff that I find interesting. It's not like a behind the scenes paid thing or anything like that. It's like a one-time pay and when I get on lazy. The one I want to look at here, let me move you over to Active Trader Pro. DPST is continuing to go down, 437. Actually, it's made its way a little bit back up. Top, I'm still interested in top. Don't ask me why. 1080. See how it's kind of losing? In the afternoon, it definitely loses its... it gets that morning pop. And I think, Jose, this was where you got it, a pop. It went up to like 24. But yeah, your 10-day is at 8.4 million, about 8.5. Your 90-day is at 1.1 million. So you've still got volume, but you're only at 156,000 shares traded hand so far. So I think it's over. That's how you can always tell when something's over, is when it kind of just dies down on the volume side. Let me move you back to Safari. And I'm going to look at this. Okay. Let's see. SPY, Debt Ceiling, Palantir, PayPal, Lucid, Google. Should I bring up Stephanie links? And I'll leave it in there. We'll look at Tesla. I think I might put Tesla in the title. Tesla always seems to get a bunch of listens. If I put it in the title. Okay. Let's go over this. Good morning. It's Tuesday, May 9th. There's nothing big about today. Nothing exciting about today. Unless you're Joe Biden and the Republicans meeting at the White House about the debt ceiling and what could bring down the United States of America. You have it's a trifecta. You got the debt ceiling, you got the monthly inflation number, and you got PPI, which is the cost of production. Those things will guide the market. Ironically, I've got SPY up on the screen. This is the 4-hour algorithm. It got you back in at 412. This got you out on May 4th last week, but it gets you back in at 412. And again, it's a 4-hour algorithm. It's a simple algorithm based on the MACD. It's not anything super complex. It winds up, underperforming on this particular index over 2 years. It winds up losing you 9.8 versus just buying and holding is at 0.3, 0.3 gain. So I take it with a grain of salt. I do think that at some point in time, and I don't know what the catalyst is, but you will see it come down here and cover this gap between 396 and 398. I don't think we're looking at 340. I don't think we're looking at 320 anymore. I think you're looking at just under 400, and we're at 412 right now. In pre-market, you're at 411. If you go and look at the weekly, and I think I showed this yesterday, and you take a look, we don't have that descending wedge. We have an ascending wedge. So we've gotten out of it. You'd still have a red candle, but you have confirmation above the 9-day. And typically when I'm buying, that's what I'm looking at. I'm looking for confirmation above that 9-day. Now, the MACD is up higher. The RSI is at 56, so you're in no man's land. It's not like it's overbought or oversold. You're right in the middle. The MACD during the highs back in January of 469. This is on SPY, and remember, it's weekly. This is January 2022 of last year. The MACD was up in this neighborhood, not super far away from it, but it was extended back then. We're making our way back as Vanessa, whatever her name is, making our way back downtown, facing back, and it's homebound. I don't know the lyrics. Your boy ain't a karaoke guy. But let's talk about some of the earnings. I held Palantir until December of last year, and I sold Palantir in December of last year. I think it was around this price. I think it was around 637 or so. It's at 776. In pre-market, you're at 907. It is up 17%. They announced that they're actually making money again. 5 cents per share. They increased their guidance. They said they have good traction. Everything's going well. Do you invest in this? Well, if we go over here and we look at Palantir, and we can see the PE, their forward PE is 31. Their price to sales is $8. They are expected to grow 33% this year. Performance year to date, they were up 20% before this incredible 17-20% move. So they will be up even more. Performance for 1 year, they're down 23%. So if you've held on to this for a long time, you've lost money, significant amount of money. The pivot point on this one has always been about $7 or $8. I haven't covered it. I got rid of it. I dumped it. I chose Snowflake. And the reason I chose Snowflake is just the pricing model, but Snowflake is much more expensive. You are expecting Snowflake to grow significantly more, but it has not performed year to date as well as Palantir. Snowflake, and remember, they're just data. I mean, this is just data stuff. And you can see the descending wedge here where it's putting in 134 as the support level right there on Snowflake. Their earnings are coming up May 24th. So I chose Snowflake. I probably chose wrong, but I chose to hold on to Snowflake. That's what I did. Yeah. It's still speculative. I don't think you get into this current rally. I think you wait. Another earnings one that I do think that you could get into. But it's sliding, and it dipped under 70. I was going to say if you can get the 60 handle, that's better. But PayPal, they had earnings. They were good, but slightly below estimates. My personal opinion, and again, this is just a personal opinion, is that you're covering this gap up here at some point in time this year. Their CEO is retiring. They haven't identified a replacement yet. So there's a lot of kind of speculation about this one. But I use Venmo. I use PayPal. I use this stuff. They're making a lot of money. I think they do really, really well. I think the management got screwed up, if you remember, way back in history. Where there was a big drop. Jim Cramer recommended these guys. And then they had earnings. And then they announced that they were going to buy Pinterest. And everybody was like, what the F are you doing? And it was up here when it was at 171. This was January 2022. And they just continued to slide down. Now, I do hold this one. I hold a significant amount of it. I think my average purchase price is about $120, 130, somewhere in that neighborhood. I've bought it on the way down. I just think you've put your bottom in here. When you look at last time in July of last year when it was trading in the 70s, you bumped all the way up to 100. And that was with 80 cents, 88 cents a share. Then it went to 93 cents a share, then $1.08, $1.24. You're making $1.17 per share. I just think the market just doesn't like this temporarily. And I think at some point in time, if you buy this in the 60s, I think you're going back to the 90s. If we look at PayPal, their PE is 36. Their forward PE is 13. Cash per share, they have $10 per cash per share. 29,000 employees. They're probably going to cut that down, I would think. Year to date, they're up 6%. So you probably still have some downside on this one. The average price target is $98. $98. I just think it's a good opportunity for the long term. Try and get it under 70. Right now, it's back above 70 as we're trading. So it's floundering around that price point. But that's a good one. Let's talk cars. Because Lucid reported earnings. They reported year over year fewer deliveries. How do you do that in a production in a new car company? Lucid is just too expensive. Let me look at my notes. Reported and they missed. Lower deliveries. Don't get sucked into this on pure hope. They have enough capital to last until Q2 2024. But remember, they reduced deliveries. So it's not like they're increasing their cash. They are bleeding cash. And Q2 2024 is when they run out of cash. That means they're going to have to a dilution event, which means they issue more shares, which means as a shareholder, you lose money. It's trading at 4 times revenue. It's too expensive. The only reason you would buy this, and I repeat, the only reason you would buy this, if you think that the Saudis are going to buy it and take it private. When you look back here in January 3rd, that's what took this up to $11 from $5. Its low was about $6.17, it looks like. You can see this pop, this one pop that got it up to $17.80 on January 27th. That was the rumor that the Saudis were buying it. But here's my thing. Why would the Saudis pay $17 when it's trading at $7.71? The only reason it got up there is because there was hope in this sense. And then the rumor came out and it popped it. You ain't getting back up there. Again, they're not making money. They're losing 43 cents per share. Last quarter, they were losing 28 cents per share. Do not get sucked in on this. I will go over Tesla later. I will include Lucid as a reason to buy Tesla. Do not get sucked into this one. Google is having their developers conference tomorrow. This is going to be filled with AI. On the 4-hour algorithm, we buy GOOG versus GOOGL. Let's go into Seeking Alpha. And we're going to put in GOOG and we're going to compare it to GOOGL and compare. And so the purple is GOOG. And you know what? Let's trash the S&P. I don't care about the S&P. We're just going to compare these two. Now, year to date, look, 20.67, 20.93. 1 year, minus 4.28, minus 4.21. 3 year, 55.92, 55.70. 5 year, it's a 2% difference. So long term, I do think that you want GOOG. The difference is GOOGL provides you voting rights. You will never be able to swing a vote because Larry and Sergey own so many shares of the voting rights. Never, ever in the history of the company will you ever swing a vote. So that voting right means nothing. But when Google buys back their stock, they buy GOOG. So that increases the price. And that's why I say in the long term, I think you're better at GOOG because they're going to buy that stock back. So here's what you have. 108.23. I loaded up on this under 100. I think my average purchase price recently is like 95. So I didn't get it in the 80s. A lot of it. I wish I had gotten a lot more of it. But it just had a buy-in at 108.23 right before the developers conference. It's trading at 108.74. Are you upset if you buy it at 108? Nah, I've bought it at higher prices. It always just seems to come back. But expect a pump because tomorrow we'll have heavy news on AI. Heavy news on AI. I am working on, by the way, a look at sell in May and go away for the last 5 years. I'll do a view of monthly or weekly. I'm working on TrendSpider. So stay tuned for that one. Brandon wanted me to go over RXO. RXO Inc. I think this is one of his nutso ones, but we can take a look at it. Actually, it's not one of the nutso ones. This chart's messy. 28 cents per share, then 11 cents per share. Looks like it's a newer company that may have IPO'd up here in the 20s. Let's look at RXO. Let's go to FinViz. Industrials, it's a trucking company. Market cap of, it's a tiny one, $2.22 billion. Year to date, it's up 12%. It hasn't been for a year. Performance for half a year is up 20%. Performance for the quarter down 3%. Average price target is 22. It's trading at 19. Let's see if there's any insiders, options exercises. Nothing huge. But it's a smaller company. It's only a $2 billion company. I don't see anything that would turn me off. The only thing that would make me think this isn't worth it is because your target price is 22 and you're trading at 19. Yeah, it's like, 10% gain, but those target prices are typically a little bit extended. Their earnings, their PE is 24. If we go to trucking and we look at some of the PE, I'm on FinViz. Again, this is free for everybody to look at. If we just sort by PE, you can see RXO is down here. It's a little bit high on the PE scale. You can see Yellow Corporation has a PE of 3.8. Let's look at some of the big ones. I just don't see, I don't know this universe all that well. But you can see a $2 billion market cap. It's middle of the road here. There's a lot of smaller ones. But yeah, what really would concern me, Brandon, is that your upside is not huge. Unless you have some type of knowledge that this thing's going to explode. And you can read those news articles. But April 26th, RSO lowering target price to 19. That's the most recent. Cowen is the one that has it at 22. That was February. April 4th, benchmark company said hold. I'm not too excited about it. So it doesn't get me like, oh my God, I've got to do it. Sam on Facebook wants me to look at SOFI. This one I know a little bit about because Charlie from MLS, I'm doing a call out there. He asked me about SOFI, I think when it was in the 7s. I think it was last year around this time when it popped up here for earnings. And I said, hey, Charlie, you should probably sell SOFI right after the earnings because it popped up, sell it. And I think I texted him in the morning. It was around the finals time. And I said, Charlie, sell it. I said, no, I'm holding on to it. And it was up here, about $6. So here's what I know about SOFI. They just had their earnings. They lost 5 cents per share. They lost 5 cents per share last quarter. $5.47 is a buy right now in the algorithm. I don't know that I'd necessarily buy it. Banking is typically, right now specifically, it's hard. SOFI doesn't have a problem. They are heavy into student loans. And so they got killed over the pandemic when Biden and the government forgave student loans. That's 100% what took this stock down. Is it a buy now? It's just, the banking sector in my mind is just a no touch unless it's a huge bank like JP Morgan, like Bank of America, like Wells Fargo. Year to date, SOFI is up 18. Its average target price is $7.50. You're at $5.40. So it's a decent upside. The most recent analyst outperformed to neutral. They lowered their price target to $5. And you're trading at $5.47. I just don't see SOFI as a huge one. They have some innovative moves that they've done. Like, for instance, when Silicon Valley Bank went down. And you were only insured up to $250,000. SOFI came out with a program with like 30 other partner banks where if you deposit $2 million up to $2.5 million, they'll spread it around to different banks so that all you need to do is deposit it into SOFI and they'll take care of the rest. So you're insured up to like $2.5 million. So they have some great products. I'm just not sure that, you're going back up to the $7 or $8 level before you go back to the $4 level. They haven't instilled confidence in me yet. Brian asked, what are the top 3 healthcare stocks? And I wanted to kind of go over, okay, let's look at healthcare. Because if we go up here and we go to FinViz and we go to the home here, and we can just click on healthcare. Let's just click on healthcare. Let's go, you know what? Let's just go to a healthcare mainstay, Johnson & Johnson. We'll go to healthcare. And let's just take a look at some of these screeners. We can look at the sector of healthcare. We can look at, I don't care about the exchange. Let's say it's mega cap healthcare. Okay, $200 billion or more. You have 10 companies. Let's say dividend yield. We want to say a high dividend. Well, nobody's got a high dividend. Let's say positive, anything positive. So all 10 provide a dividend, some type of dividend. Then let's sort them by PE. And if we sort them by PE, you can see Pfizer, 7 PE. I mean, to me, it's undervalued. I think it's a $40 stock. You're trading at 38 right now. United Healthcare, next lowest PE at 22. I mean, look at Eli Lilly at 68 PE. Is it good? I don't know. Make up your own mind. Merck, I'd rather invest in Merck with a 23 than Eli Lilly, which is hitting 52-week highs at 411. I'm sorry, at 432. The 3 that James pumped up there, UNH, which I said, hey, UNH for me, UNH. And by the way, I am not a healthcare expert. That's why I did it quickly like that. But play around with FinViz. Look at that. And you can look at the PE. You can look at dividends. I mean, if you just say top 3 healthcare, I don't know that, you can Google that and you'll probably find some douche on the internet who's going to tell you. UNH, 485 is my buy-in. I think you can get this around 470. It's just floundering, and we're in this trading range with healthcare. Healthcare is an industry that is typically very defensive. So when you go into a recession, people go into healthcare. But James added UNH. He also added HCA. Let's look at HCA. This is HCA Healthcare. Let's see about the HCA. I don't think they're a mega cap. They're a $76 billion company, so it's medium cap. Year to date, 15%. So it's performing significantly better than UNH. PE is 13, so it's a low PE. The average target price is 307. It's trading at 277. So HCA looks like a good one if you wanted healthcare. James also CI, which is Cigna, which I've seen. And this one, look at how beaten down it is. You're at $330 up here. You're at 264. It seems like it has that button hook. We'll take a look at the chart. It's got a PE of 12. Target price is 336. You're trading at 264. Year to date, it's down 20%. The most recent analyst, Cantor Fitzgerald, neutral, 285 is the price target. You're trading at 264. Let's take a look at the chart of CI because it has been beaten down. Is it oversold? it seems to have popped up after its earnings. $5.41. The RSI is at 63. It does have a buy-in here at 260, and you're only at 264. If you like healthcare, it's got a 1.84% dividend. So he also brings up Humana. I think Humana has been a long-term fan. James has been a fan of Humana. And you can see the 52-week range is between 410 and 571. So you're only 6% below your 52-week high. But your target price is 601. So your average analyst believes it's 61. Over 1 year, you've made 23% in this stock. Its PE is 21's. Dividend is negligible. It's 0.66. Most recent Cantor Fitzgerald overweight 597. You're trading at 535. So James gave you some good ideas. I think you play with FinViz if you want to look at those things. Look for an oversold stock. The screener is amazing, Brian, on FinViz. Let me bring up regional banks. You guys have seen PacWest, PACW, is the big one, and it has been going nuts of late. You could have bought this. The low was $2.48. Today you're trading at $5.53. You closed yesterday at $5.98. This one went all the way up to $7.50 yesterday morning. It has pulled back. In my opinion, and I've listened to many experts, it's just too crazy. Don't think you're going to pick a winner, because you could pick Silicon Valley. You could pick Signature Bank. You could pick First Republic. And there's listeners here who have picked First Republic based on me probably telling them, yeah, it's a $13 bank, the thing. But then the management did douchey stuff. The management basically said, we're not going to take a buyout of $13 a share. It's worth $100. Well, you know what it's worth today? $0. You know who should be going to jail? The management. Douches. So DPST, in my mind, I think DPST actually protects you a little bit if you want to gamble on these. The upside isn't as huge. I still see this gap at 11. But remember, to get to 11, that I posted in the private Facebook group, there is a great chart of how how much it takes to gain back after your losses, and it's broken down in a graph. And I always say a 50% loss takes 100% to get back to even. That's what you have to know. It's huge. It's hard. So you want to basically, again, this is in the 65-minute algorithm. You have not done well with DPST over the last, since April. It's just lost you every single time. So do I think the DPST is a good one? No. Do I think you could gamble on it? Absolutely. Do I think you can make money on it? You can make money on anything in this market. Volatility is what you want in order to make money. But this one does not do well. Where do you want to go if you want to get into the banking sector and you think you like it? Schwab. In my mind, Schwab is a great long-term play. I've gone over it. It's a $2 billion bank, but they have close to $100 million in actual business. Their market cap is $83 billion. And again, that's because their stock has just been going down, but it's a $100 billion business. Their PE is 12. Their average target price is 66. Year to date, it's down 42%. Their most recent two downgrades from Redburn and Morgan Stanley. Morgan Stanley brought their price target down to 68. The average price target is 69. But you can see everybody's buying this through March. Insiders at higher prices. It's at 47. Lord knows if this is going to work. Lord knows if this is going to work. But in my mind, that's a good one. In my mind, too. Now, mind you, here, the algorithm, the 4-hour algorithm, doesn't have you in Schwab. I've said when it dips into the 40s, I think you can get it. It'll be back up in the 50s. You could sell it if you want to. I think it's a $60 stock in a healthy market. So I think it's $60 stock. If you want to sell it, if you want to take profits, just understand I think it's a $60 stock. But it could go down to 20 before it goes to 60. Just make sure you're sizing your position and you're protecting yourself. Here's Bank of America. Your boy owns this one at an average price, I think about $28 or $29. Anything under 30 in my mind is a great buy. You can see 28.84 here. It got you out with a 1% loss right here. But you could have made money up to 30. Could have gotten, 8, 9%. And then it dips back down here at 27. You've got this descending wedge. I do think this gets above 30. I will add to my position. Wells Fargo, I bought at, I think, $39. It's at 37. I'll be adding to it. Same thing, descending wedge. The support here is at 36. If you think 30, if you want to wait till 36, you're only at 37.88. And pre-market, 37.88. The market just opened up. I think those two are great. I think Citibank is a good one. Citibank here at 45.83. Just got you out, doesn't have you in. None of these have you in from the algorithm standpoint. I'm just giving you ideas. So let's go back to cars because Tesla. I posted in the private Facebook group that Motley Fool believed Tesla is a buy. Tesla is back in the 160s, 169.92. I think 160s is a decent price for this. I do still see this gap down here from 148 to 154. It has not been filled. It started to fill it here. It got to 152 on April 27th. Are you upset if you buy this at 167, 168, and it goes down to 152? Nah, because it'll go back up to 200. Here's what I have to say about Tesla. There's a lot of talk about full self-driving. My parents own a 2020 Model X. I own a 2018 Model 3. Both of them have full self-driving. I have tried full self-driving on both. It is a nightmare on local roads. It is far better than the majority of self-driving. I think Google's Waymo and GM's Cruise that are trialing in San Francisco, they've had problems, but they drive without a driver 100%, and they do it on a daily basis without huge disruptions. Tesla is not there. Tesla still needs the driver to make sure that the car is going well. Too many times it has taken off into a lane that it shouldn't have. Locally after a stop sign, it speeds up after a stop sign. It does come to a full stop. It crawls sometimes into intersections. It is not as good as I tend to think it would be, or what the fanboys say it is. But I will tell you, holy crap, highway, you can't get better. It changes lanes. Guy in front of you is going slow, changes lanes, goes around him. Highway, it saves me. You guys know I drive from Atlanta to New Jersey a lot. Probably 15 of the 16 hours I'm on self-driving. I love it. Elon announced you're on full self-driving 11 point something. I don't know which one. But he said with version 12, artificial intelligence will be point to point. And here's what that means. So today, the full self-driving does use the neural network. And it uses artificial intelligence to identify objects. So it's 100% vision-based, and it identifies objects like kids, like squirrels, like dogs, like cars, trucks, blah, blah, blah. You can see it on your screen. But it uses, trash cans, cones. It identifies that you're in a construction zone, blah, blah, blah. But it does use artificial intelligence for that. Artificial intelligence point-to-point means it's going to start making decisions about how to drive. Am I excited about that? Probably not. But I do think that it's a big step in the full self-driving, because I do think that Elon made a mistake in taking the radar and not using LiDAR. I think those are the two keys to actually getting significantly better self-driving today. They do put the cost up there. So he wants to cut costs, so he winds up doing it vision-based with just cameras, which is significantly cheaper because it's software over the long run. He says it's going to be able to have some full autonomy by the end of the year. Lord knows I don't believe him, because it's been, I do think, and I've talked to this, I paid, I think, about $3,000 for my full self-driving. I think my parents paid about $8,000 or $9,000. I think it's worth that for some people. The $15,000 that he's charging today, no way. It's not worth it. I'd take the advanced autopilot and just be happy. Buy it at a later date. It will be $20,000, or you can buy it on a subscription basis. But Tesla, in my mind, right here, absolutely 100%. I'm entering into a position again. I'm waiting for probably it right here at about 165. I'll probably put in a buy today at 165. But I do worry with the SPY up so much. This one could take it down. Again, if we have to come down, this one's going to come down and fill that gap. So I do worry about that a little bit. So if I do enter a position, it will be a very small position. I'm not loading up on this one right now. As it continues to go up, I will add to my position. Even if it continues to go down, I will add to my position. I'll just try and double dollar cost average. Scans. There are too many scans to go over. Yesterday was a big day for scans. I posted all of the scans in the private Facebook group. If you want to join the Facebook group, down below there's a link tree. Look for my picture, and then there's a Facebook logo down there. It takes you directly to the private Facebook group. Go and look. If you want me to go over a chart, I will absolutely go over a chart. I will be reading these, and I'll do some charts right here. But if you want me to go over a chart, just ask. Just reply to that one and say, hey, can I see a chart of that? I will publish a chart in the comments, reply to you with a chart with the 4-hour algorithm. Or if you want the 65-minute algorithm, or if you want me to look at it, I'll add it to tomorrow. But we're going to start with PXD. PXD is one of my favorites. Man, I like this stock. PXD 212.32. Your boy here is in at 208 with a small position, and I haven't added to it, but I probably will today. This one, the reason I like it, 10.93% dividend. Now, if we go to FinViz and we look, and down here, you can see natural gas is up 1%. Oil is back down 1.72. PXD today is up. It's even. It's at 212.41. This is 212.32 as the buy-in. You don't have a ton of gaps that haven't been filled here. There is still a rumor that Exxon may be looking to buy this one. Their ex-dividend date is coming up May 31st. So PXD is one. Devon Energy. This is one I like too. Big dividend in the energy space. And I do think that this one continues to go up. They have some operational difficulties. It's costing them more money. But you know what they do? They just give you a dividend, 9.92. You're down 15% year to date. Average target price is $66. You're trading at $51. The buy-in is $51.01. You do have a gap down here to 48. You could probably get it with a 40 handle at some point in time today. I think it continues to go down a little bit, but I'd probably just add to it. I do have a rather large position in this one. We went over Google, GOOGL and GOOG both had cross-ups. You can buy either one. Walmart had a cross-up. CRM, the Salesforce had a cross-up. XLY, Target, Merck, Disney, VOO. This is one I'll show you because entry points are important. VOO is an S&P tracking, just like SPY. It has this ascending wedge, just like SPY, 379.22. It is a low-cost Vanguard ETF. It's just the S&P. All it is the S&P. So you could buy SPY, you could buy Vanguard ETF. Just do a Google as to cost and see which one's cheaper. But they're both the same thing. They just include the S&P. Costco had a cross-up. Since this is in the core portfolio, I'll look at it. Under 500. It is at 499.06 is the buy. You've got this descending wedge and ascending wedge, just like in SPY. Anything over 500, I'd sell it. It just seems to bump up against 505 or so. If it breaks that and continues up, you're probably looking at 522, but it's got to be a great economy to do that. Visa, Caterpillar, AMZN, Travelers, Kellogg's, Keurig Dr. Pepper. Enphase is one. This is an interesting one. It's a solar play, and we had Sedge with a cross-up yesterday. This Enphase had a cross-up in the morning yesterday. At 161, you're at 159. This one continues to just move down. It has been beaten down. It is still expensive. Still expensive. Enphase is PE is at 48, but this was at 90 before. The average target price is 265. You're trading at 163. April 26th, downgrade from Bank of America. They downgraded them and gave them a price target of 169. Again, it's at 153. So it's even below that. Let's take a look. Enphase, ATVI. This is a cross-up. This is Activision Blizzard. Warren Buffett was asked over the weekend, do you think this one's going to go through? He said, I don't see a reason not to. I think they made a mistake. You got gaps all the way above this one. 95 is the Microsoft price target. I think Microsoft will probably just gracefully bow out. So I don't think it's worth it. Melly had a cross-up, and I think they had earnings already. Yeah, they had earnings. It had a cross-up. It's just kind of floundering up here around 1,200, 1,283. This one on the algorithm makes you 28% versus over the 2-year period. If you buy and held, you would have lost 5%. So it does well. It does okay. Melly is the Amazon of Latin America. All of the energy names, the oil drillers, OIH, which is an ETF. This is the oil services ETF 263. That had a cross up. ConocoPhillips, COX, PXD. We talked about Marathon Oil, MRO, BTU, Devon, LNG, which is the Cheniere Energy. LNG is one that under 150. This one crossed at 149. I think you're good at buying this at 150, and then over the summer, as you know, Europe starts to put in more things. Look at the gain, $15.78 to $22.10. And we can look at LNG. They're only paying a 1% dividend. The PE is only 4. Forward PE is 12. Year to date, it's down 0.25. Average target price, 199. Yeah. And you can read all about the Reuters stuff with natural gas and stuff. These guys basically, they pump cheap American liquid natural gas onto ships and ship it over to Europe. The cost is somewhere about, $4 or $5 here in America, and they're selling it over in Europe for like $40 or $60, somewhere in that neighborhood. And it goes up to like $100, $200. The cost remains the same. It's just what they sell it for continues to rise. Levered ETFs, URTY, SPXL, HIBL. Again, any of the Vanguard groups and several sectors, XLG, XLRE, and XLY. So you've got all of those names, and do your own research. I mean, man, don't rely on a guy on the internet to do all of your charting for you. Go and do your own. But they're all in the private Facebook group. Let's talk about sponsors. First sponsor, Visible. Visible is on the Verizon network. It is a cell phone company that basically prepaid cell phone company. It is just like your Verizon service. I repeat, just like your Verizon service. If you want to look up Stetson Dotson, I think is his name, on YouTube. He does Verizon versus Visible comparisons all the time. Visible is constantly on his top list of cell phone providers. If you're paying anything more than $30 per month for your phone service, just use the link below. It gets you $25 a month. Plus $20 off your first month. The link below saves you that $20. So your first month is $5. I would say if you have a phone that is capable of eSIM, just get an eSIM and get a new number and test it out against your current phone service. If it doesn't work, you're out $5. If it does work, God, you're saving a lot of money. And we talked about, $10 a month is $120 a year. Invest $120 a year. It pays for itself. Second sponsor is TrendSpider. All of these charts that you see with all of the annotations, everything. These are my algorithms, 4-hour algorithm, the 65-minute algorithm, the scans that I do, all of the stocks that I find that are bullish. Any of those things, all of it, I share with you if you sign up for TrendSpider using the code DSP25. It gets you 25% off. Actually, if you use any code and just email me, and I'll get you switched over to my plan. I can share everything with you. It's one click, and we'll set this up for you. They are a great, the best charting service ever. I mean, honest to God, I did my research. I used TradingView. I used others. I just don't see. And one of the subscribers who actually, the listeners, posted in the private Facebook group, the most recent ChatGPT that was integrated. ChatGPT wrote a TrendSpider strategy. So it's got its own algorithm. It seems to be doing fairly well. I know they're going to check up on it and stuff, but you can watch on TrendSpider's YouTube videos. You can watch the video of it writing the TrendSpider stuff, ChatGPT. They go over it. I have not watched it, full disclosure, but that's the second sponsor. If you make money off of my picks, I just ask that you tip me. The tips are in the link tree. Venmo is the preferred one. Cash App, if you like Cash App. You know, I also have PayPal. Whatever you want to do, it's all in the description in the link tree. Just tip me. I'm like a bartender, man. If I find you a stock and you make money on it, yeah, tip your bartender. It's appreciated because I don't charge for any of this stuff. I do this all for free. And go and try and find somebody with a Discord group. Google Kelly OG, who just bought her mom. She charges $200 a month for all, just what I do. All she's using is moving averages and stuff. So if you have any questions, hit me up. I'm happy to answer any questions. I am usually on YouTube live every day. So if you want, join in the morning. I know most people have jobs, so the degenerates are the ones who just hang out and listen. Again, if you have any questions, hit me up. I will see you tomorrow. Have fun. Enjoy. Okay. We stop recording, share, export song to disk. It was only 42 minutes. I thought I talked a lot longer. Boom, boom, boom. PayPal dipped. I own too much freaking PayPal. Probably should just sell it. But I do think it's a $90 stock. I think if it gets up into the 80s and 90s, I'll sell it. But it's at 67. Man, that's just too low. How is that at 67? I think this one falls into any reaction in the market is an overreaction. Here we go. Credit Suisse. Outperformed to neutral, but they dropped their price target down to 85. Oh. Yeah. I mean, it's the debt ceiling. See, even Motley Fool says shares of PayPal dropped 7%, is approaching levels not seen in more than 5 years, even though there are some signs that its fundamental business prospects might turn around. Lose it is just a freaking waste of time. I just think PayPal. Yurev, you want to know how to make money? It's buy and hold. Let's see. Boeing is up 3%. Wow. How is Boeing up 3%? What news did this hit? 737 MAX order from Ryanair. That's what it is. Guys, if you're not subscribed, subscribe. And remember, hit that thumbs up button. I'm going to move you over to Active Trader Pro. We can watch top. Let's see. Let's watch Tesla. Most active is Palantir. Palantir has come back down pretty hard. Tesla's moving to 170. Get it while you can at 160. Let me go over here and I'm going to go to GarageBand, quick GarageBand. Save. New episode. Browse. Desktop. Podcast. Upload. We'll go swapping tubes again. What's Elmore Heights? Oh, it's in my headphones. I think I like vinyl couch today. Yeah, we'll do vinyl couch. Why not? Insert. Boy, there's a lot today. Who's not subscribed? Who hasn't hit the thumbs up button? We had a good amount of people join today on a Tuesday. Let's go back here. I'm going to post this and then I'll post the YouTube later. Episodes. Notes. Still processing. Invex. Shopify is a great freaking stock. I own, $40,000 worth of Shopify, $50,000 worth, quite a bit. I've just added to it. I think I'm almost positive on it now. It's a $90 stock by the end of the year. Okay. Okay, let's see. Oh, I don't want that. What else did I cover? Snow. Okay, we're going to bold all of this. I'll bold all that. Why not? Five, 9, 23. We're putting Tesla in the title. Publish now. Okay. I am out of here. I'm going to eat some breakfast. It's 10 o'clock. I'll post the YouTube. Actually, you know what? I'll just post the YouTube now. Why not? Yay, new subscriber. Luke. Thank you. Upload videos. Desktop. There we go. MPEG 4. We're going to go over here. We're going to put this in the title. SPY. We're going to go and copy all of this. We're going to put that there. We'll go over to Canva. See you, Brian. I'll see you tomorrow. Projects. Which one should I do? Show more. Show more. Maybe I'll look at this one. We'll do this one. I think this one's a YouTube one. No, we're going to take that out. We're going to do elements. Yeah, we'll put this one. We're going to say Tesla. Boom, 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 boom. And we're going to say what did I title this? Let's see. Bring this down significantly. Okay. Share. Download. No. PNG. There we go. Download. Boom, boom. And we're going to quit. Quit preview. We got all that. Upload thumbnail. Download shock face. Upload. No. Next. 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 Publish. Okay. I'm out, folks.